particularly in the banking sector. Let's move on to other markets in West Africa, starting with the BRVM. The BRVM 10 index closed trading at 229 points yesterday, down 1%, so a pretty steep downside move there. The BRVM composite also lost about 0.8%, closing at 206 points. Total value traded on the day was 175 million CFA francs, while the currency for the region is currently at 505 to the US dollars. Moving on to Ghana, we saw the GSE composite index close at 1,906 points, down 0.25%, while the GSE financial stock index was down 0.5%. The year-to-date change for the financial stock index is about 58%, and the CD currently trading at 2.02 CD to the US dollar, so slightly weaker, now about 7% lower for the year. And moving on to Nigeria, the NSE All Share Index moved up for the 5th consecutive session, up about 0.9% to 37,720 points. The gainers on the day included Champion Breweries, Cornerstone Insurance, and Custodian and Allied Insurance. Let's now cross to the stock exchange where Babajide Solanke is standing by to talk us through his thoughts on where the market is right now. Jide, thank you very much for joining us. All right, so let's focus a bit on where this market is likely to go. For me, a key thing to note is the volumes we're seeing. They've come down significantly over the last few sessions. It was down to about 2.4 billion yesterday. Friday was 2.9 billion. So we've seen a gradual decline. Is this something that worries you, especially considering the fact that the market continues to rise even in this context?
Yeah, thank you, Wale. It's understandable why the market should rise in this context because the number of shares needed to move share prices up and not that much in the Nigerian space. And again, stocks are allowed to move by 10%, which is a major reason why the stock market has done so much in this season. Going forward, my thought still remains that we'll continue to see intermittent, breaks and stops and movement in the Nigerian Stock Exchange broad index. And the reason is because there's significant cash out there. As the analyst earlier mentioned, the banks, for me, what they did mention that the banks have significant amount of cash on the balance sheet that they need to deploy to generate assets in terms of the deposit liabilities in their books. So going forward, I believe the market will continue to attract people because current valuation is pretty okay, apart from the highly capitalized consumer goods and the rest of it.
All right, so you say the valuations are attractive, but yet the volumes are low. I get the sense that people are cautious. So why are they that cautious then?
Yeah, it's cautious because it's around treacherous waters. If you look at it both in the domestic environment and the external environment, domestic environment, the major problem in Nigeria is the monetary policy stance and to pan out going forward for the rest of the year. And it's understandable because from the global perspective, you can see that there's a lot of concern about the monetary policy action in advanced economies and particularly the US, how it taper out, and the concerns about foreign portfolio investment when the cash will begin to move out. Particularly for Nigeria, you see in terms of foreign exchange stability, there's enormous, tremendous pressure on the foreign exchange market, and the central bank may become more restrictive than it has been. So people are just cautious generally. Weak external demand in terms of commodity importers are not really. China is showing weak figures. The United States growth is not very strong as anticipated. Of course, the election year is around the corner. It's just reasonable. And if you look at it again, the stock market has done very well. Over 70%, over 70 stocks on the stock exchange year to date have done very well, beating indices, in my opinion, that you can use to measure whether inflation, whether alternative asset investment like bonds, like treasury bill. So it's just rational that people should be cautious about this current prices.
So how much upside do you see this market giving us going forward then for the rest of the year? Your thoughts?
Upside, maybe about 2 to 5% to close the year from the current valuation, because we'll continue to see at the same time intermittent profit taking. So we'll see increases and decreases along the continuum. But to end the year, maybe about 2 to 5%. With the current about 34% year-to-date value.
Right, the consumer stocks, the consumer companies, of course, have done pretty well, especially when you look at over the last 18 months. Do you think we're going to see more pressure? Because it's interesting to see that over the last week and a half or so, we've seen quite a few of them begin to recover again. The likes of Nestle back to 1,000 naira. Yeah,
Nestle is understandable because Nestle is a company that normally gives interim dividend. But aside of that, which they give about 9 months, so 9 months is around September. But what we've seen is that for the consumer good, what we've seen that for most of them that depend on imported inputs in terms of agricultural produce for the input, particularly for sugar, for wheat, we've seen falling prices in the international market, and the outlook going forward is that we'll continue to see the prices will continue to moderate downwards in the international market. So input cost, is going to be lower for them going forward, and of course that will trickle down if they maintain the same operating expense. If not, if they don't reduce it as I anticipate, then going forward, it still looks pretty okay in terms of valuation.